Welcome to our beginner's guide on investing. Whether you're starting out or looking to enhance your investment knowledge, the tips that we're going to go over today will help you navigate the financial landscape effectively. First thing that you want to do is start with a clear goal. Before you jump into investing, it's very important that you set clear financial goals. Define your objectives, such as saving for retirement, buying a home, or if you have a child that's going to college. Having specific goals helps you tailor your investment strategy accordingly.
For example, if your goal is to retire comfortably in 30 years, calculate your desired retirement savings and use this target to guide your investment decisions.
It's important that you understand risk and return. Risk and return are basic fundamental concepts when it comes to investing. Risk refers to the potential for loss, while return is the profit or the gain that you'll make on your investment or your money. When you understand and balance these two factors, that's going to be key to building a diversified portfolio. Understanding and balancing these factors is key to building a diversified portfolio. Let's take a look at stocks. Generally, they offer higher returns, but they come with a higher risk as compared to a bond, which provides more stability, but it has a lower return. When you think about your financial goals, you want to compare that to the amount of risk and the return that you want to make on your investment.
Another area that you want to focus on before investments is building an emergency fund. You want to prioritize building an emergency fund because you may have an emergency. Everybody has.
You will have an emergency.
You will. Everybody has an emergency that arises out of nowhere. And the benefits of an emergency fund is to cover unexpected expenses, such as medical bills or job loss. And it also ensures that you don't have to liquidate your investments during emergencies. Protect your investments by putting an emergency fund in place.
So think about it this way. If you can save 1 month, 3 months, 6 months worth of your living expenses in an emergency fund, this is going to help protect you from financial instability. And you want to make sure that it's in a savings account or somewhere where you have easy access, but not too easy. But you want to have access in an event of an emergency, and this keeps you from having to liquidate or close out your investments.
Yeah, man. Especially if you have investments set for long term, it's important to just leave those investments alone. Another powerful tip is to diversify your portfolio. Diversification involves spreading your investments across different asset classes, such as stocks, bonds, real estate, etc., to reduce risk. A diversified portfolio is less susceptible to the market volatility.
So what that can look like is having a mix of stocks, bonds, mutual funds, REITs, which are real estate investment trusts, to diversify your investment portfolio. If the stock is risky, for example, then you can also have a bond to offset the risk that comes with investing in a stock market. Research and evaluate investment options based on your financial goals, risk tolerance, and time horizon. So what you want to do is consider factors like historical performances, fees, and investment objectives before making any decision.
You want to put good practice in with risk management. So do your research before you enter into any trade or investments.
If I've done my research on a particular investment, then it helps me feel more comfortable if the market
confident
if the market has a down day. So what that looks like if the S&P is down, 10% in a day, but if my stock has averaged 12% over the last year or over the last 6 months, then I'm confident, despite the bad day, to let my stock or my investment remain.
Another tip is utilize dollar cost averaging. And dollar cost averaging is an investment strategy where you invest a fixed amount regularly regardless of market fluctuations. This approach reduces the impact of market volatility over time.
And you know what? One thing that we want to think about is when the market's down,
Yeah.
that's an opportunity to purchase stock or to purchase your investment at a discount.
Yeah.
When you have appropriate investment strategies in place, then you're more comfortable putting money into the market even when it's down. Because if the S&P or if the Dow is down, then that means I'm buying stock or I'm buying my investment at a lower price.
Yeah.
Right? And so again, with dollar cost averaging, it averages out over a period of time. So when you're up, you're up. And even when you're down, the average between the up and the down is going to put me somewhere in the middle.
Focus on long-term investing as well. Adopt a long-term investing mindset to benefit from compounding returns. Avoid making impulsive decisions based on short-term market fluctuations.
You should stay informed with market trends. It's as you're investing in the stock market, you want to stay updated with market trends, economic news, and industry developments. If you're regularly monitoring your investments, you can adjust your strategy based on changing market conditions. Again, taking into consideration your investment strategy, the research that you've done, and your financial goals. Last but not least, monitor and rebalance your portfolio. Regularly review your investment portfolio to make sure that it continually aligns with your goals and your risk tolerance.
Yeah.
Things happen, life changes. Rebalance your portfolio by adjusting asset allocations if necessary to maintain diversification. Don't hesitate to seek guidance from financial advisors or experts, especially when it comes to complex investment decisions. What they do is they provide personalized advice based on your individual financial situation.
I hope these tips have helped you and motivated you to get started today with your investment portfolio. Be wise on who you seek advice from. Make sure you do your due diligence and research. Find resources or books or a mentor that can give you further advice on investing.
If you're still watching, that means you like this video. Make sure that you like and subscribe for more content.
Peace.